Hello everyone and welcome back to my channel. You are watching The Wealthy Brains, and now let's get in this video. Andy Schectman has been a prominent figure in the financial services industry for more than 25 years, during which he has served as president and owner of Miles Franklin Precious Metals. Andy Schectman, who is president of Miles Franklin, tells why they are the safest way to do business in the industry. They are licensed, bonded, and background checked every single year by the state of Minnesota Department of Commerce. They are participating in the Sprott Natural Resource Symposium and work with Rick Rule and his clients. They have never had a customer complaint and have several worldwide exclusive arrangements with Brinks in terms of our rate structure and our safety deposit box program in Canada. Andy thinks silver is probably the finest investment on the planet. When the gold and silver ratio gets closer to 35-1, switch to gold. But right now, unquestionably, silver is a better buy. Before starting Miles Franklin Ltd. in 1989, Andrew became a licensed financial planner, specializing in Swiss franc investments and alternative investments. To have your wealth solely in dollars right now is a massive mistake, said precious metals distributor Andy Schectman. And he also gave his thoughts on the silver supply chain and why the silver squeeze is not a mirage as thought by some. Meanwhile, Andy debates the incredible demand for bullion and broadening mainstream adoption. Metals are beginning to make up a small but increasing percentage of investor portfolios. He describes the metals markets as unlike anything he has seen in the past 30 years in this industry. I think if you look at what JP Morgan did, it's classic misdirection. They were the large short, they're now net long. They double-crossed the other commercial banks, but they used the paper short price, really since 2011, to amass 1 billion ounces of silver. That's the largest physical position of silver and the world's ever seen. And north of 25 million ounces of gold. All told, it's the single largest position of physical metal the world's ever seen, and they own it. Bought at subsidized prices by holding down the price. Andy Schectman, Miles Franklin. He explains how there are 6 well-funded primary distributors in North America. These distributors have contracts with all major sovereign mints and refineries. All the mints are struggling with production, leading to increased risk. Therefore, the entire supply chain is raising premiums. The Reddit movement has renewed his optimism regarding hope for precious metals and the eventual exposing of the banking system's activities. There are also 6 primary mints: the US, Canada, Austria, Australia, South Africa, and the United Kingdom. Mexico has recently curtailed most production. All of these mints are inefficient and most are reporting production issues. He discusses how both Canada and the US mint have reduced availability and rationing to dealers. He recommends investors get out of unallocated synthetic products like Kitco, Perth Mint, and ETFs SLV and GLD. There is an awful lot of smoke at Perth and Kitco, and where there is smoke, there is likely fire. The COMEX will change the rules to avoid default, and this is why steady adoption of metals is the best approach. When there is little supply left, it has to spill over into the COMEX markets. If everyone takes 2 ounces, soon there will be nothing left. And he discusses the upcoming Basel III reclassification of gold into a Tier 1 classification and how globally we see massive repatriation of gold. 70% of the world's population are rapidly moving away from the dollar and becoming part of China's One Belt, One Road enormous infrastructure project. Andy feels the platinum to gold ratio is almost as compelling as silver. Although it lacks the rich monetary history of gold and silver, he believes that silver is the pathway to getting more gold and platinum. Trust your gut. Buy the dips. Consider metals as generational wealth, and don't focus too much on the manipulated price. With the current gold to silver ratio at 85-1, Miles Franklin founder Andy calls the ability to swap gold for silver at today's prices the opportunity of a generation. Because while sentiment in the silver market may seem like it's an all-time low, these are the exact conditions that long-term value investors often dream of and salivate over finding. And as Andy speaks to in his recent interview on his gold and silver swap program, trading gold for silver at a rate of 85-1 is a prime example of just that kind of opportunity. With the current gold to silver ratio at approximately 79-1, Many are wondering if the ratio will revert back to the often cited 15 or 16 to 1, which would mean that silver would appreciate at a faster rate relative to gold. But where does this number come from? And will the ratio return to a level of 10 or 20 to 1? Indeed, prior to 1900, the gold to silver ratio hovered around 16. This was likely because many countries were using gold and silver backed currencies. For instance, France and the United States, among others, assigned statutory limits on what the ratio could be. Also, the US Geological Survey estimates that there is 17.5 times more silver in the Earth's crust than gold, which could provide another explanation for the pre-1900 gold to silver ratio average. Yet how is that all likely to play out given where we stand in the world today? Perhaps it's worth distinguishing between what should happen and what will happen. Given the depletion of the above-ground stock of silver in recent decades, the growing industrial demand for silver and the geological ratio of the metals in the Earth's crust, certainly supply and demand would favor that the ratio comes down significantly. Of course, in today's Orwellian financial markets, there is also the possibility that at any given point in time, the government could come out with a decree of what they feel the ratio should be and implement it via mandate. Although I continue to wonder how effective such a move would be if attempted, the current government structure existing solely based on the ability to print in order to fund its operations. When the metals do finally break out, what is the status of the government going to be at that point? And if the world finally realizes what those who have been studying the Federal Reserve have already discovered, do we reach a point where the government or banks can decree what prices should be and the markets just doesn't care? For some, that's hard to believe given the stunning decade of market manipulation we've just witnessed. Yet, if there is all of that leveraged paper gold and silver that is unable to be delivered, whether it happens this year or it takes longer to manifest, then we might suspect there is an imbalance that at some point must be resolved. And if the financial markets fracture at the same time the government is in chaos, we may reach the point where the market will simply not care about any ordained decrees. If that is the case, then certainly given the fundamentals, a reversion somewhere closer to 15 to 1 as opposed to 79 to 1 seems plausible enough. Although keep in mind that while perhaps it makes sense that the ratio should be around 15 to 1, it has very rarely traded anywhere near that level over the past 100 years. Where the ratio goes and how it gets there will largely be dependent upon events that have yet to unfold, and certainly it makes enough sense that the ratio could come down substantially from the current 79 to 1. Should you be interested in swapping gold for silver? Andy does personally favor silver over gold, with most of my precious metals holdings being in silver as opposed to just a few gold coins. So the ratio is an interesting data point to start with and then continue to think further about, because while there is nothing to guarantee that there will be a straight line to 15 to 1, there is evidence to suggest that silver is significantly undervalued relative to gold. That is all for today, folks. If you enjoyed the video, then leave a like, and if you are new, then do not forget to subscribe. See you till the next video, and thank you for watching.